So, this will be a formal discussion, a business discussion of why Sony is seemingly afraid of the Microsoft Activision-Blizzard deal. What you are seeing currently now in your screen is the last 5 years of Sony's stock price movement. As you can see from 2018 of January to the end of December 2021, sorry, it has sharply rose, and that is because of a lot of great games from the PlayStation side, as well as, of course, Sony's other ventures into music, into mobile gaming, because Sony Music does own the Fate mobile game, which is actually generating billions for them. So that's something to take into account. Sony has gained a lot of popularity during the PS4 era, and with the way that the stock market moves right now, it really is sort of heavily affected by marketing and news articles. And so, yeah, that's something to take into consideration, that the PS4 was very popular, and the PS5 is also currently very popular right now. So what did cause the decline of Sony's stock prices? Now, on your lower left screen, please pay attention. You can see that what I'm highlighting here is February 28, 2022, which was the first reported attack for 2022, where Russia invaded or started invading Ukraine. As you can see, I'm only highlighting this because I'm not going to discuss this part of the stock market, because wars often heavily impacts the stock market, and it's very hard to account for, especially for someone who's, just an average Joe. The closing value for Sony on this day, on the 28th, when Russia attacked Ukraine, is $98.4 per share, which is a huge decline from its overall peak. But like I said, anything from February 28, 2022 onwards, we will not be discussing it, because that was the start of the decline of almost all stocks within the stock market. Now, this is the peak of Sony's stock back in December of 2021. As you can see again on the lower left side of the screen, it states December 27, 2021, with the highest stock market value at 128.30, the lowest at 124.74, and closed on that day at 126.40. Now, movement from a 128.30 to a peak of 128.30 to a close of 126.40 is a pretty normal movement within the day for these multi-billion or trillion companies. So nothing here is really of any significance. It's just the normal stock market movement. But it is worth noting that this is the highest that Sony has gotten since 2018 in terms of stock market value. So yeah, a value of 128.30 on December 27, 2021 is the highest since 2018. Next, this one is the highest that Sony has achieved for the year 2022. On January 4, 2022, Sony stocks were valued at 128.55 on its peak. And on January 5, it closed at $128.59 per share. However, on January 10, 2022, Sony's stocks closed at $124.79 per share. Now, you can say that this is a pretty big movement. However, this is just a movement within several days. Nothing here is of significance as long as the stock bounces back, which is what became a problem because of January 18, 2022. Now, before we begin, I said that the January 10 doesn't matter because, again, on January 14th, Sony stocks again closed at 124.79, which is lower than the peak at December, a lot lower. Something to note again, with the rise of Sony's stocks and, of course, Microsoft as well, and Nintendo, because they're all in the gaming division, is that the coronavirus had a largely positive impact on video games, given that a lot of people can't go outside. A lot of people, started playing video games. So with the softening of the restrictions in several countries, or at least several key countries that spends a lot on video games and does affect the stock market, or at least the perception of the value of these companies. The decline in January is sort of expected because more and more people can now go outside, and less people would have gaming as their only means, or at least their most engaging means of relaxation, or just to keep up the positive spirit. With that said, I think a lot of major investors, big investors, accounted for that decline, because at least for that portion accounted for that decline, again because of the softening of restrictions regarding the coronavirus. However, on January 18, 2022, Microsoft announced the purchase of Activision-Blizzard. And on that day, Sony stocks peaked at 121.70, hit its lowest at 110.02, and closed at 111.63. Now again, like I've mentioned before, daily movements within the stock market is very erratic. So a lot of these changes aren't very significant in the long term usually. But nonetheless, the news of Microsoft purchasing Activision Blizzard did shake up the industry and placed a lot of eyes on it, as you can see from the regulating bodies that are currently investigating or looking into whether to decline or approve the purchase for their respective jurisdictions. It is also quite significant, even though it's just a change within a couple of days from 124.79 at closing to after a couple of days it became $111.63 per share at closing. Now, what made this decline in stock market value for Sony was that from January 18, 2022 to February 2022, even before the Russian invasion of Ukraine happened, in that span of month, because the invasion was reported at February 28, 2022. So Sony had more than a month to shake off the fear from the major investors. However, in that span of time, in a month, it didn't. It stabilized at that price at around $110 per share. The stock market really did fall through, at least the Western stock market. I'm not paying attention to the Asian stock market, even though I'm in Asia. I know it's crazy, but it's hard to invest here. So after the further decline of stocks because of the ensuing war, Sony stocks actually rose between March and April. So it actually showed signs that a lot of people still believes in the brand and did expect it to bounce back again. However, the war continued, and all facets of the economy around the world were affected by this, especially because Russia exports a lot of gas, and Ukraine is also known to export a lot of fuel to different countries. I think Russia did export fuel as well. So gas prices skyrocketed, and a lot of the economy went down um, in sort of a domino effect. So yeah, the decline of Sony stocks from February 28, 2022 is something that we shouldn't really consider in looking into the gaming space, because everything went down from that point basically. Some did go up in stock market value, but yeah, war is it will throw everything off really. So yeah, now let's go into the articles that discuss this the purchase of Activision-Blizzard by Microsoft. Now here is the Wall Street Journal. Sony shares fall sharply after news of Microsoft deal for Activision-Blizzard. What I want to highlight here is that I've seen a lot of people say comparing Sony to Microsoft is quite a stretch, because beyond Microsoft being a lot bigger, Sony's main, or at least Sony is mostly known for its games. Now, while that is true, Sony has other businesses outside of gaming. They have electronics, and as you can see here, from Naoki Fujiwara, who is a fund manager at Shinken Asset Management in Japan, he states that games is surely one of its main businesses, one of Sony's main businesses, but they've also got electronics, chips, movies, and so on, as well as PlayStation Plus, which is sort of a competitor for Game Pass and has reportedly more subscribers, 47.2 million at that time, back in this is an article from January of 2022 after the Activision announcement. So yeah, at that time, PlayStation Plus had 47.2 million subscribers, as announced on way back in September 30 of 2021, which does have a huge edge over Microsoft's 25 million subscribers within Game Pass, as well as Sony's PlayStation 5 has been selling really well, and the main problem actually with Sony with the PS5 is that they can't meet market demand currently at that time. So yeah, that was because of the global semiconductor shortage, but it also states that it is because of Sony PlayStation, the PlayStation side, is the number one contributing factor to the rise of Sony's stock. Here they state that it actually rose 92% between the beginning of 2020 and last week, prior to the announcement of the Activision-Blizzard deal. So that's a huge increase, and that is mostly because of the PlayStation side of Sony. So it does nearly doubled the stock market price of Sony's shares. Now here is an article from Barron's saying Sony stock has tumbled. Why investors are worried about Microsoft's Activision deal. Shares of Sony Group are under pressure for a second day as investors continue to assess the risk to the company's PlayStation business following Microsoft's agreement to acquire Activision-Blizzard for $69 billion. Microsoft has said the deal would make it the world's third largest player in gaming, trailing only China's Tencent and Sony. So right now, even with Activision, even without Activision and Blizzard, no one really knows where Microsoft is in the gaming space. It could either be third or fourth. It's certainly not second or first, because first or second would be between Sony and Nintendo. What I want to point out here is that Tencent is also a major player within the gaming industry. They're a major player in mobile games, and that even after Microsoft's purchase of Activision-Blizzard, they would only become the third largest player in the gaming industry. And this isn't even by revenue, this is sheerly by size. So, in terms of revenue, I still think that Sony, Tencent, and Nintendo are way ahead of Microsoft, even at this time right now. So, I'm not sure about Tencent, but it's just given that the mobile gaming market is ridiculous. Certainly, if you've ever looked into the mobile gaming market, the revenues are off the charts. So there's something there that's hard to account for within the console space, at least. Barron's has also stated back in January that Sony has shed over $17 billion in market value simply because of the announcement alone. Next, we have Financial Times article, Sony shares fall 13% after Microsoft's Activision-Blizzard deal. US tech group's bid wiped $20 billion. Again, these are estimates from different companies, journalists as well. So yeah, 17 billion, 20 billion. It depends on what day you looked at it, on what specific time, because a small movement is a lot of money. Again, the impact is mostly either overhyped. Sometimes it could be overhyped, and sometimes you really have to wait a couple of weeks or a month to see whether that huge movement really has a lasting impact. Nonetheless, Financial Times says that Microsoft basically wiped $20 billion from Sony's valuation within a day. It's kind of a hype statement. I mean, it's true to a degree, yes, but if for anyone trying to get into the stock market or trying to pay attention to it, huge movements within the day for these multi-million dollar conglomerates, you have to assess the risk or pay someone to do it for you. Now, that's just pointing out that journalists can overhype things even though it doesn't need to be, or underplay things even though it's bigger than it seems, or outright lie, because I don't know. Journalism now is very tough. Nonetheless, what I want to point out here is this particular part. On the bottom, you can see they state that long-term Sony stockholders said the shares were being punished over knee-jerk fears that the Japanese company had been put under pressure to come up with a big acquisition of its own, either by counterbidding for Activision or seeking out a different target that would now be at a high premium. Counterbidding for Activision, Microsoft will be very hard to counterbid for Sony. Sony does have good cash flow as well as Microsoft, but let's face it, they can't counterbid Microsoft. Really, I think Microsoft can even go higher for what they're valuing Activision for. Now, what I'm pointing out here is the phrase knee-jerk fears that were given by long-term Sony stockholders. This is very funny to me because knee-jerk reactions within the stock market has been normalized, and if you paid attention, even from the boom of the cryptocurrencies, A lot of movements in the stock market are knee-jerk reactions, whether positive or negative. This is true. This is also the same. If you want to understand it in much simpler terms, you can view it in terms of review bombing for movies. Review bombing for movies are often called out when it's a negative, when a movie gets review bombed negatively, but they never call out review bombing in a positive way. People giving perfect scores all the time, 10 out of 10, 20 out of 20, 100 out of 100, 5 stars, no explanation, no questions asked, that's it. So, yeah, review bombing, knee-jerk reactions within the stock market can both be positive and negative. What in terms of how the consumers would benefit or lose from it, and also knee-jerk reactions can happen on a positive as well. I would consider that the peak of Sony's stock value back in December. Sorry, I mean back in January. In January 5, 2022, where it reached the highest 133.75 per $133.75 per share. That's a huge knee-jerk reaction for Sony's stocks, and no one's calling it out. So these are the things that you also need to consider. Knee-jerk reactions work both positively and negatively. It can be a knee-jerk reaction that increases the share price of a stock or decreases it. But everyone only points out the decrease part. So similar with review bombing and how they point out negative review bombing, but not the positive ones. So as you can see from this graph, Activision-Blizzard rose a lot. The stock valuation for Activision rose upon the announcement that Microsoft would be buying it. Capcom, Square Enix, Ubisoft, EA, Konami, even Take-Two also rose at that time. Let's pay attention more to the Japanese companies such as Capcom, Square Enix. Let's take into consideration Ubisoft as well. So, what the article is saying here is that if Sony does want to sort of regain its composure within the stock market, they should also try and purchase a company, which is also what a lot of people were thinking at that time, and a lot of investors also saw that as a good response for Sony, at least according to this article. So the valuation of the other companies also went up because people bought it, thinking that, especially with Sony and Square Enix, thinking that Sony might buy these companies as an answer to the Activision-Blizzard purchase announcement. So, as it states, in 2 weeks at its results meeting, is Sony really going to have to tell the investors that they plan to grow organically after their rival has just made a $70 billion deal? If they are going to look at buying something, they have a big advantage on home turf in terms of M&A, said industry analyst Serkan Toto, noting that the Sony share price drop was a typical overreaction by games industry investors. Again, this overreaction is only ever pointed out whenever it's a negative for a company. Nonetheless, pay attention to the statement that, yes, Sony does have an advantage in purchasing Japanese companies because of M&A laws within Japan, where it's nearly impossible, I think, for any foreign company to completely buy a Japanese company within the country of Japan. So with Sony being a Japanese company, they could buy Square Enix and Capcom with um, I believe it will still be scrutinized, but within Japan, it would at least be, you know, they would be softer on it than, say, if Microsoft were to buy Capcom or Square Enix. I know that PlayStation's headquarters is now in California, in America, but Sony's main headquarters is still in Japan. Lastly, here it states Damien Song, a technology industry analyst at Macquarie in Tokyo, said Microsoft's grab for Activision reflected how the maturing console games business would inflame competition with Sony, referring to Xbox, of course. The maturing of Xbox. As the US tech group worked to counter its Japanese rivals' market share lead in consoles with heavy content investment pertaining to Game Pass. If Sony wants to match what Microsoft is doing, they would need to move into PC and mobile and then acquire the kind of multiplayer games that work on those platforms, said Song. That is expensive. Yes. So you can see now why Sony has started releasing more and more of their games in the PC for PC releases, whether through um, Steam, GOG, or Epic, and acquiring their acquisition of Bluepoint, which is focused on making mobile games. So they are covering their. This is to bolster their market share again and to recover from the decline. But nonetheless, I'm not sure why no one ever states that Sony owns the Fate mobile game, which does create a lot of revenue for them, billions of dollars per year. So yeah, I think that should have been here. Nonetheless, that's all for me. I hope you gained a better picture as to why Jim Ryan is really trying to stop the Activision Blizzard deal. It's because even say after the war is over, when the markets gets flooded with investments again, when when people are less inclined to buy stocks again, so they buy a lot more, stock value goes up, and everything sort of balances out again as to where it should have been prior to the war. What Sony is most afraid of is their position being solidified on that decline because of the Activision deal. If the Activision deal caused them to go from around $128 per share to $110 per share, I think they are also looking into the possibility that $110 isn't even the lowest that their stocks would go once the market stabilizes after the war and once Microsoft has acquired Activision. I also would think that it would go lower if they don't secure a heavy multiplayer title, because I believe a lot of gaming investors actually invest in companies with multiplayer titles because it is continuous revenue for the company. So there's also the marketing side of it. The market has been really saturated with a lot of sort of hype, or whatever the opposite of hype is, into the rise and decline of stocks for certain periods. You can see this with different multi-billion dollar companies. So yeah, Sony has a great cash flow. I believe that they won't really go bankrupt. However, I also think that a lot of people bought, or at some big individuals, big investors, bought Sony's stocks at its peak or near its peak at around, I would say, I don't know, when it was $128 per share or $133 per share. I think there are big investors that are looking to recouping what they have seemingly lost after the Microsoft Activision Blizzard announcement. But I think that's staved off for now, at least, because, well, the war did depress almost every stock within the stock market. There's a soft recession caused by it as well, so there are those things to consider. However, so when the war is over, Sony needs a huge boost, basically. There are, I believe, major investors, multimillionaires, multi-billionaires investing in these companies. They have contracts that needs to be fulfilled by the company that they're investing in. So, sort of a security that they won't really lose that much, or it will be mitigated if they do lose some money. I think, yeah, even with a lot of cash flow, the gaming market really, at least for, the stock market side of the gaming industry, I think they are really reliant on huge multiplayer titles or games as a service. Side note, in the article for Financial Times, they did mention that Sony might want to enter a contract with EA to make Battlefield exclusive for them, or at least temporarily exclusive, to bolster its position within the industry. But with the release of 2042 and the way that it was really basically broken, from what a lot of YouTubers said, that went out the window. And I believe Microsoft also made a deal, and I think they lost a bit on that deal given how 2042 launched. But I think it's being worked now, and I've seen some YouTubers saying that it's really good now. So, maybe in the future, maybe the next Battlefield, Sony might enter a contract with them to make it exclusive to the platform for, I don't know, a year. But I hope that this does not affect PC, because a lot of multiplayer titles exist on PC as well. They make a lot of money on it. And hopefully Sony's multiplayer titles go to PC day and date, because if not, they're killing a lot of revenue for it. So if they don't release the PC on the same day, that's it.